So this is 29th of April 2024 and this trade was taken in the Indian stock market. The stock name is Max Financial Services and this is the daily chart updated up to the previous day, which is Friday 26th of April 2024. So now what do you see? So the price has swept this buy side liquidity and then there is a big expansion towards the downside, and if we call this a bullish order block based on the last down close candle for this up move, then this Friday candle closes below this order block. So if it is a bullish structure, then any kind of order blocks should not be closed, should not be violated on a closing basis like this. So since this is closing basis, for us the bias is bearish, but up to which point? Up to this point. This is our first draw on liquidity, and after that, if it clears this with the convincing price action that we will discuss, then the next draw on liquidity is this gap. This gap volume imbalance, this is the next draw on liquidity. So having that in mind, we move to today's price action. So this is today's chart, this one, this is 5 minutes chart, and what do we see here? First of all, it takes the previous day low, this red line, and then this first draw on liquidity. This line is this one and this block is this one. So then it takes the first draw on liquidity, that means this one. So after that, what happens? We see here there is a clear bearish fair value gap here, and price comes back here and fails to close above it. See, these two are bullish candles entering into this bearish fair value gap but failing to close above it, and also creating a strong rejection, a strong bearish candle here. So once this is created, we moved on to 3 minutes chart, and we see here, we had a bullish fair value gap, this one, this was a bullish fair value gap, then it is immediately overtaken or violated by this bearish fair value gap. So then what is this? This becomes our balanced price range, BPR, balanced price range. So then once this happens, we took our trade right from here, keeping our stop loss right above this high, and our target is this, little bit this. So you see 1.73 is not a favorable target. So what I did here, I took my entry to a point where it is like 2.5 or something like that, like this. Like this. So then as you can see, it actually went here and triggered my entry. Then after that, it moved a little bit in the opposite direction and almost hit my stop loss, but actually then again came back and as you can see, it actually gave me the target here. So this was the entry and this was the exit, and as you can see here, price is actually getting rejected or reacted from this fair value gap, not fair value gap but the actual gap here. So price did came here and then getting rejected. I don't know if it is going towards having a bullish intention or it will again come back. That I cannot predict right now, but at least it is getting a rejection. So the learning is that whenever you have a liquidity close to your trading leg where you are trading, so it is always better to take the profit or the target right at that liquidity, and it is not advisable to bring your target here just to match the risk to reward. For example, if you are working with 3:1 risk to reward and your entry is here and you are not satisfied with this much because it is giving you 2.545 or 2.5, then you just drag it to make it 3 and you shifted the target, then it is possible that you will miss the target and it will hit your stop loss, because this is the discount area from which it can actually react. So if you are determined to have 3:1, then better thing is to move your entry and adjust it accordingly so that it becomes 3:1. There is no point to move stop loss or target. These two should be fixed as per the chart. So that's it. That was a winning trade for today, 29th of April, and now it is 11:27 and I am waiting for other stocks to give me signals for buying or selling. So let us see if I can get any.